What is equipment breakdown coverage? Equipment breakdown, mechanical breakdown, and boiler and machinery coverage are all terms used to describe the same type of coverage, which is intended to protect a manufacturing company's machinery and equipment from sudden and accidental breakdowns, causing that machinery or equipment or other systems to cease to operate. Hi, I'm Gordon Coyle. Welcome back to my channel, where we talk about the risk and insurance issues on the minds of business owners. In this video, we're going to talk about mechanical breakdown insurance. If you have other questions or issues on this topic or anything regarding business insurance, I'd love to hear from you. So, when it comes to breakdown policies, there is a key word that coverage hinges on, and that is accident. An accident is defined as a sudden and accidental breakdown of an object or covered equipment. Often the words fortuitous event are used in a policy, which also imply that the event happens by chance or accident. It wasn't an expected event. And the reason that's in the policy is to exclude claims that occur from wear, tear, and neglect, which we'll talk more about in just a minute. So, what does equipment breakdown insurance cover? It covers the cost to repair or replace damaged equipment in a covered loss, the lost income from a covered claim, the spoiled inventory and work in progress from loss of refrigeration or directly associated with an equipment breakdown, the necessary expenses incurred during the repair period, such as expediting temporary equipment to the site, and hazardous substances. Many policies will include a sublimit for contamination caused by hazardous substances and cleanup. The types of equipment that can be covered include process machinery, refrigeration and freezer systems, air conditioning systems, heating systems, industrial boilers, electrical distribution panels, computer and telecom equipment, just about any electrical and mechanical equipment you have. So why is equipment breakdown important coverage for manufacturers? The costs involved in a breakdown can be significant between repairs, downtime, lost productivity, and income, and consequential loss. So this is specialized coverage you really need. Your property policy does not cover claims resulting from breakdown, so without including it in a manufacturer's insurance program is very problematic. It's a must-have coverage part. What does mechanical breakdown insurance not cover? Mechanical breakdown insurance does not cover every form of a breakdown. As I mentioned earlier, the breakdown must be sudden, accidental, and unforeseen. The most common excluded claim for breakdown is wear, tear, and gradual deterioration. It also does not cover direct damage to equipment from perils outside of breakdown. For example, you still need to insure this property under your commercial property policy for perils such as fire. What are the top equipment breakdown claims for manufacturers? The first one would be electrical surges, short-circuiting, arcing, malfunctions, and failures. That's the leading cause of damage to machinery and equipment in manufacturing plants. Number 2 would be mechanical failures of motors, production machinery, and boilers. Number 3 would be pressure vessel failures and bursting. Number 4 would be damage to electronic equipment and computers, mostly electrical damages. Number 5, damage to HVAC, refrigeration, and freezer systems. Now, business interruption, isn't that covered by my property policy? Business income or business interruption is covered by your property policy, but not for claims which arise from breakdowns. That's why having a breakdown policy is critical to cover the consequential loss that results following a breakdown or a failure. I have seen situations where the direct damage cost to a manufacturing or processing machine were only a few $1,000s, but the consequential claim for lost income was hundreds of thousands of dollars, which can happen in specialized machinery environments, and parts need to be shipped from Asia or Europe or actually fabricated overseas and then shipped, which causes delays that can go on for weeks. How do you prevent breakdowns? Having breakdown insurance is critical, but preventing losses from occurring is even more critical. Yes, regular maintenance and inspections of key operating machinery, equipment, boilers, electrical panels, and such are very important, but there are other inspection tools that can enhance normal maintenance operations. As an example, we've used thermography in manufacturing facilities to identify hot spots in electrical equipment panels and connections that could lead to imminent failure. Here's the bottom line. A breakdown is going to happen when you least expect it, or when it's possibly the worst time for it to happen during a peak operating season. Insurance is going to cover the cost to repair that machine or equipment on an expedited basis, cover the lost income that may result from the breakdown, as well as cover the work in progress or finished products in storage if it's a refrigeration claim. That's why I think it's an absolute must-have. Now, an important consideration is to craft your equipment breakdown coverage correctly with the right options, limits, sublimits, and endorsements. And this is where the role of the skilled broker comes into play to make sure you're getting the right protection. If you need help in crafting the right protection for your manufacturing firm, I welcome your call. In the description box below is my contact info. Call me, set up a time to chat on my calendar, or email me. I'd love to hear from you. Thanks for watching, and do me a favor and hit that like button if you like this video. Thanks.